What is the hope that you're still hanging on to for this name?
Yeah, I think the challenge with Peloton for the last year has been that because of the turnaround in the business, they have so many one-offs on the P&L that it's really hard to understand the underlying company performance. But when you strip out all of the one-offs, things like high-cost inventory sitting in a warehouse, litigation, severance, store closures, asset write-offs, if you strip all of that out, the underlying numbers are getting better and better. Now, it still loses money, but it has slashed its OPEX in half. Its underlying profitability on the bikes is positive on a gross margin basis. And so the business is turning around. Now, what we need to see is the top line flipping to positive. And they do expect that to happen in the next fiscal year. And once that starts to happen, we'll see the rest of the P&L working. However, from the headline numbers, you don't see that progress unless you strip out all of the one-offs and look at the underlying numbers, which is harder for investors to read.
Well, another problem, too, is the recalls themselves. Even if you think that the worst is over, what risk is there with the trust they have with their clients?
So there have been 2 recalls. One has been quite major, which was the treadmill recall, but where a few people were actually injured quite seriously as a result of it, and that has been out of the market for over a year and is finally coming back into the market later this year in time for holiday. The second one was a very minor recall. It was the seat post that in very, very few instances gave in, and that's already been rolled out. So I think the bigger trust issue was for the treadmill, and we're now kind of 2 years out from that. It hasn't impacted continued sales of the tread, which is continuing to sell in the market, not the same model. So I don't think it's a huge trust issue. I think it's more from an investor perspective. They've just had so many recurring issues. They've had some terrible luck with, various litigation, a couple of different recalls, inability to sell one of the assets they were hoping to sell off. And so as a result, the P&L hasn't improved as fast as we hoped.
Right, even the CEO, Barry McCarthy, said on a conference call after earnings that he doesn't know how many of those unwelcome surprises there are in the future, but he figures they have to be getting closer to the end of the story. How much more uncertainty do investors have to bear when it comes to the Peloton story?
I think the next couple of quarters are going to continue to be a little bit uncertain because we're still in the summer period, which is a slower period for sales. We've had one summer quarter, we're in another one that ends in September. And during that period, because the top line is going to be soft, negative, or quite soft, as a result, we're not going to see a lot of leverage on the P&L, and we still have one-offs to get through. I think as we get into fall and winter, as the top line ramps up, they expect it to go into positive territory, and a lot of the inventory has now been sold out, so we can now start to see the improvements in inventory reflect in the cost base. We'll then start to see the P&L working, but I think it will take another quarter.
And Aneesha, as we covered, you're sticking by your rating here. What could go wrong, though? What would you need to see at Peloton that would prompt a downgrade from your shop?
I think to me the biggest question is the sustainability of demand. For a lot of these COVID winter categories, home durables is another one, where 2021 was such a good year that we've now seen 2 years of negative sales just comping off that to normalize. And we've seen a bit of that with Peloton. They had such a phenomenal year and a half that we're now kind of getting back to normalization. In a normalized post-COVID world, how much demand is there? That's my biggest question. And if the answer is not much, and if the answer is kind of low single-digit sales growth for the foreseeable future, that doesn't sound great for operating leverage and for sustainability of the business. So that is the biggest question, and we don't know the answer to it yet, which is what is the sustainable level of demand for Peloton's products in a post-COVID world?
And Aneesha, we only have about 45 seconds left with you, but when you talk about the sustainability of demand, put that against the macro backdrop, against the possibility that we might get a recession here.
Yeah, it's tougher. I mean, they're a much better value proposition than they used to be. They have refurbished, they have rental, they have different use cases, they have digital apps. So all of those, I think, will help sales. But you're right. I mean, buying a $6,000 Tread Plus or a $2,500 Bike Plus in a recession environment, I think is going to be a tougher sell.